I'm Sam Deeb from the distribution team at Pinnacle. Today, I'm thrilled to be joined by Dr. Peter Gardner, Senior Portfolio Manager of the Plato Australian Shares Income Fund. We're here to break down some of the key company results from the current Australian reporting season. Let's dive in. We've had a few insurers report this week. How did the team view the results from both IAG and Suncorp?
Look, overall, it's been a really good result from the insurers. You can see on this slide that I'm bringing up that the cash earnings of Suncorp were up 17% on last year, and the cash earnings of IAG were up 100% on last year. So they're doing a lot better in the higher interest rate environment with also lower claims at the moment. You can see IAG's insurance margin, which is the kind of profit they make on their insurance, went up from 9.6% to 15.6%, so a massive increase. Profit from general insurance from Suncorp was up 29%. Now, their bank did struggle a little bit, down 20%, but that, as most people know, is being sold to ANZ. So it was kind of a good result from the continuing part of the business for Suncorp. Both of them had big increases in dividends. Suncorp was up 63% and IAG was up 89% on last year, which equates to pretty decent kind of annual gross yields. They're not huge at 6.2% and 4.3% respectively, but they're pretty good. And what they also called out, which the market liked particularly for Suncorp, was that while their gross written premium was up strongly on last year, which we already knew about, they were guiding to mid to high single digit premium increases. So it's not too good for the general consumer in terms of buying more insurance, but it's good for the insurer profits.
Great, Pete. Thanks for that. We also had Santos report this morning. I know it's a company many were watching closely. What's the takeaways here?
Look, it was a bit of a weak result from Suncorp, actually. Their profit was down 18% on last year, which we kind of knew it was going to be down given the fall in particularly gas prices, which influenced them. But their earnings were actually slightly below expectations due to higher costs. But they did deliver strong cash flow, which was the positive, and that allowed them to increase their dividend because they kind of aim to pay out around 40% of their cash flow as dividends or buybacks. And in this case, they paid it out all as dividends. And so the dividends were up 49% on last year, which equates to a 5.9% annual yield for this dividend. We're a bit underweight Santos at the moment, so it was kind of good for us in relative terms. We prefer Woodside in the current environment. But overall, a kind of slightly weak result from Santos.
Thanks. Just wanted to also get your quick take on the Telstra result, Pete. Look, I know it's a stock that's widely held for many income-seeking investors.
Yeah, so I mean, Telstra is an interesting one for us. We've kind of moved around our position quite a bit, and we're currently overweight because, we think after the recent kind of sell down of Telstra, where the market thought that when they were moving away from CPI pricing, that was actually going to mean that their pricing went down, but it's actually looking the other way, that they've actually moved away from CPI pricing because they've been able to increase their mobile prices in particular more than the general inflation in the overall market. So overall, it was a good result from Telstra. Their profit was up 7.5% on last year, and they're guiding to profit being up another 5% next year going forward. So that's a pretty decent result for a company people kind of don't necessarily associate with growth. They were able to increase their dividends up 5.9% on last year, which equates to a 6.5% annual gross yield. And so, as I kind of mentioned, the mobile service revenue is what kind of is the biggest part of their business now that we've got the NBN, and that revenue was up 5.6%, a lot of which was price increases. So that was positive.
Sounds like a great result. Before we go, was there any other companies that you wanted to call out today that have released their results?
Yeah. So we had some good results from Brambles, from Charter Hall, and also a special dividend from the Lottery Corporation, which was good because we're overweight that stock. And then the weak results were from corporate travel and also a bit of a weak trading update from Domino's, which has a trading down about 5%.
Look, thanks for today, Pete, for those fantastic insights into how the team are analysing company results at the moment. As a quick reminder, the Plato Australian Shares Income Fund has delivered 9.5% per annum income to investors since 2011, while still outperforming the ASX 200 on a total return basis. For more information on the fund, please visit www.plato.com.au or reach out to your Pinnacle contact. Thanks for watching and have a great day.
Thanks, everyone.